from wherever you're watching us from. My name is Ronald Kazadi. Welcome back to my channel. Today I'll be answering the question, what are blue chip stocks? Now, if you watched my video on inflation, you would hear that I mentioned the words blue chip stocks. And so I thought I should do a video where I explain what are blue chips, what makes them different to other stocks. For instance, most stocks that you'll get in the market. So, without further ado, what will you be learning today? What are blue chips? What makes it different from other stocks? Why are they the best hedge against inflation? What to consider when picking a winning stock? Okay, so what are blue chip stocks? So a blue chip company is a nationally recognized, well-established, and economically sound company. Blue chip stocks generally sell high quality and are widely accepted products and services. Good companies are known to survive the recession and make profits despite adverse economic conditions, contributing to stable, reliable growth over the long term. So, in essence, these are good, sound companies like your Apple in America, where they sell products or services of high quality, so usually expensive, or products and goods that are highly in demand or still of use to people. Another characteristics is that during an economic downturn or recession, they tend to still survive, so they're not affected by any recession. So mostly what happens with other stocks is that during a recession they tend to do badly, but not blue chip stocks. And they also offer reliable growth over the long term, provided good dividends being paid off. So what makes it different from other stocks? Well, they're institutionally positioned in the economy. Good stocks are considered to be less volatile, so they're good. So the all makes it less volatile investment than owning stocks of a company that doesn't have a good track record or a good status. The equities are highly liquid because they are frequently traded in the market by both individuals and institutions. Therefore, an investor who is capricious and need cash can confidently place a selling order for their stock, knowing that there is always a buyer on the other side of the deal. So, capricious investors know that there's always going to be buyers from the other end. So they are best in class companies and are also characterized by low or no debt, high market capitalization, stable debt ratio, and high return on equity. So you really want a company that is good when it comes to debt, very low debt, because why? This makes the valuation of the company worthwhile. You see, companies with higher debt, simply the valuations aren't sustainable, simply because in terms of where we have to test if the company, if the company had to be liquidated, we'll clearly see that a company with higher debt will fail in that instance because all the money that is being made from the company will be used to pay debt rather than to be invested back into the company for it to grow. So with a lower debt, you really have a business that is spitting a lot of cash, which can be used to pay dividends and also to pay dividends to investors and also to pay for the company's growth. It also has high return on equity, so which means you will receive higher earnings than stocks which are not blue chip. So all in all, you have a solid foundation where you can see that this stock, not only does it have a good track record, not only is it high in returns of equity, but the dividends are also good. So yes, one of the most populous index to measure blue chip stocks in America is the Dow Jones. So the Dow Jones tracks 30 of the blue chip companies in America. So monitoring the Dow Jones will give you a perspective on how blue chip stocks are performing relative to other stocks, more volatile stocks. So why are they the best hedge against inflation? Well, inflation is 6% today and is expected to peak soon as the supply chain disruption starts to ease. However, the inflation over the next 5 to 30 years is expected to be much more higher than 1%, as we saw in the 2010s. Record low bond yields and a 30% overvalued stock market create a major challenge for retirees trying to live off only 3% safe withdrawal rate. That's what sorry, 33% withdrawal rate that Morningstar recommends. So stocks like PM, MB, MMP, BTI, MO, EPD, ENB, Amazon, PayPal, Facebook, and RXT portfolio you can safely buy with the market at record highs. Now, by the way, these were just examples that I've mentioned. I'm not saying you should buy these stocks, but here's what I've found out. It yields 4%, it yields 4% offer, 11% consensus growth, and 16.7 long-term total return potential, similar to that of last 19 years. Over the next 75 years, a secure 6.6% payment rate will occur within 80% chance of growing 21 to 42 times the original size while generating 25 million in retirement income. Combining the world's highest yields with a super growth blue chip can help overcome inflation today, get rich tomorrow, and help your children and grandchildren retire more affluently, no matter what the economy looks like. So, in essence, with a high return, a high paying dividend stocks like blue chip stocks with bond yields that pay the greatest return, you are safe to hedge against inflation. And if you want to know why, I've done a video on inflation, you can check that out, where I explain that when it comes to inflation, it's not only the inflation rate that you need to consider, you also need to consider the other things like tax, and if you can have a yield or an investment that yields more than the expected return, including tax, you are safe from whatever life brings. So, what to consider when picking a winning stock? Well, for most people, what they don't realize is that buying a stock means buying a company. So you need to understand that buying a stock is like buying a company. So you look for businesses with proven track records to succeed. This is mostly what blue chip stocks sell. They sell you a company or a business that has proven track record, that is guaranteed to succeed. The numbers are legit, so you have to see buying stocks as a way of buying into a business. So you're buying a business, you're buying a piece of a business. So therefore, just like any sage in business owner, you need to look at the business itself. Is it making money? Is the goods or services that are being provided, are they of high quality? Do they have do they have standing in the market, or are they in poised to new competition? All that you have to look at it in a way that is business savvy. So don't just look at stocks as just a way of making money, but look at it in terms of a business. So that means looking at the numbers. Numbers are important. Fundamentals are important. Now, most people say, is fundamentals or technicals the way to go when investing in stocks? Well, my answer is always, if you're into day trading, and if you want me to do a video on that, just comment below and I'll do it. If you're into day trading, you're not very much concerned about the long-term performance of a stock. So the daily price movements and studying the price movement will be the best way for you. But if you're into the long-term performance, if this is an investment rather than a trading venture, then I will highly suggest that you get into fundamentals. Study the numbers, study the valuations. Valuations are important. You don't want to buy an expensive, crappy company. You want to buy a cheap but high quality, high performing, and high growth business. In which I will do a video later on next week explaining what what is the difference between value investing and growth investing, and also do a video on valuation of stock. So stay tuned, subscribe to this channel if you want to learn more. Then you need to assess the risk of buying that stock. So what could be the downfall? Is this company having high debt? So debt could be a parameter. So probably the company might become bankrupt if they continue the trend of the debt. But it's not only debt that you need to look at. You need to look at the management. Do they have a management that is worth its name? Can they withstand? Can their track record make them stand out? That there's no risk involved if continue having them as management. And then you also need to look at the possible risk. Can the company become bankrupt or go out of business? What are the risks involved in getting to do business with these people? So lots of time people just look at money, 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 but they don't look at what are the risks. It could be many factors. It could be the company itself. It could be the products. Are the products still popular among the consumers, or are they going out of fashion? The various risks of doing business by buying the stock. So as I said, it's about when you buy a stock, it's you buying a business. So you need to look at what are the risks involved. You need to do risk analysis to see whether you've made a good purchase. And then lastly, you need to think long term. That is if you're investing, by the way. If this is just a trading venture, well, I would not really recommend that part. But if you're more into investing, think long term, because when you invest, you're thinking about where this business will be 10 years, 10 to 20 years or 30 years time. So you're not thinking about where the company will be in the next 6 months. So think long term. That way you will receive the fruits of your labor. If you're just thinking of making quick cash today, well, you'll be disappointed because the stock market is very volatile. It crashes, it goes up, it crashes, it goes up. But when you're long term, when you're just thinking about this in a long term perspective, all those changes won't matter to you. What will matter to you is you've looked at the numbers, you've studied the market, you've analyzed your risk, and you're able to tell that, you know what, long term I will be successful. Like Warren Buffett has been holding some of his stocks for over decades now, and some of them only pay dividends, if not 10 years or 16 years from now. But this man invested a decade before that. So that is essentially how you pick a winning stock. But if you want more, if you want to learn more about how to do this, I have taken the liberty of organizing the best books that can really help you in understanding, and you will find the links to those books below the description. Have a look at them and see which one. Have a look at them, and I hope you will learn more and more about this beautiful thing called stock investing. Thank you very much. Have a good day, morning, or evening, depending on where you're watching us from. Good night, good day, good evening, good morning.